All right, ladies and gentlemen, welcome to the show. We got a lot of great content here. Let's just dive right in. I think that before Zach gets started, I did kind of want to give a little bit of a preface here. Is that we talk about finance and stuff like that, and stocks and geopolitics, but we also have to kind of understand who Zach and I are. At our hearts, we're scientists. Me in physics and math, and Zach in neuroscience, chemistry, immunology, things of that nature. So,
Biomedical sciences and
biomedical
neuroscience.
science in general. So I feel that we're in a unique position now that he's really focusing on trading to kind of bring some of his expertise in terms of his neuroscience background, to give commentary on that. So let's start with that. This is a really good article.
Yeah, I just a friend of mine sent me this from Zero Hedge, but then that sort of it piqued my interest. So I started looking into some of the more recent neuroeconomics data that's available now. I remember back in the day, neuroeconomics was a pretty new field when I heard about it, but it's something Danny and I have been talking about for a long time. Luckily, there's a lot of it's I don't know exploded, but it's gotten fairly popular. There are whole institutions now around it, and fellowships and so forth. So there's a lot of really good data. And in particular, what I thought it'd be important to bring up in the context of this show is the measured the measured and the measured outcomes of retail traders, right? So since we don't we're not presently investing with an institution or a bank or anything like that. Danny and I would be retail traders, I guess,
Correct.
in that slot. What's interesting about it is you can just tell from our accounts. We're, I mean, just what the data says right now, we've got to be in the top. It's absolutely top 1% of the retail trading groups, because it turns out retail traders go into it thinking, oh, yeah, I have inside information. I understand things more than other people, right? Which is another neurological phenomenon, neurobehavioral phenomenon that's well understood. People
It's more of a
always,
bias, right?
right. People always, for whatever reason, it's just in the data, they overestimate their own competencies, right? Now, when I went into this in the first place, I actually went in with the reverse mindset.
Interesting, because that's how I feel too.
Right. My mindset was, at least when I first was going to try it, to just not lose money. That's what my base case was, right? Now, my account's up over 40%. So that's a pretty good, it could always be better, of course. But I start, and this is important why I'm getting to this, because of one of the papers that we're going to cover. But this goes through a lot of the research. It's a good article, and it's well cited, which I appreciate. And it discusses the problem with retail trading and traders. And you can get a little deeper into it on a lot of the pitfalls retail traders make is they overestimate themselves. And for whatever reason, they have a habit of trading too much,
Yes.
which is interesting because the data shows that, like, say you just buy the S&P index, right, once a month or whatever. People that are actually, for whatever reason, picking individual stocks and so forth. And actually, what's interesting about it doesn't matter the starting amount that they have in
Mhm.
these different. It doesn't matter. Interestingly enough, it doesn't matter at all, which is kind of fascinating. And so you can think I went in with $1 million. I better be able to make money. Nope.
Yeah.
That's not the case at all. 99% of the time, you're
I
actually going
would
to
say
come
it's
out on
the
the negative
opposite.
end.
And I can chime in. So Zach can chime in from the perspective of the neurological trading and the neuroeconomics and things like that. I can speak from experience because I used to be a trading instructor at a rather large trading institute in Montreal. And I've probably taught over, I'd say, around 300 students, and I've seen it all. And the trends overwhelmingly agree with what Zach said, right? The trends in what I have personally observed. corroborates what's in these articles. For example, the first line here: decades of trading across global markets reach the same verdict. The more frequently retail traders trade, the worse they perform. Couldn't agree with that more. I had a dude one time. We were on our way to a party he was throwing, and in the time it took us to get in the car to his house, he had entered 30 trades. Uh, and you could guess how
Really?
that went.
30,
Yes,
30
30, 30,
trades?
30. Yeah, and you could guess how that went for him. That's
I'll
number
guarantee.
one.
No, I'll guarantee it. They had to have gone, and I'll tell you, I know this from experience now. That had to have gone bad.
Bad.
Like,
Yeah.
there's no way that because that's too much sensory overload
It,
on
it
one
was,
human
and
brain
it's
from the beginning.
exactly
Right.
what that was. A lot of times, I think one of the worst things you could do is to have a trading app on your phone, especially if you're not disciplined. Because what do you do if you're bored or waiting in line for something? What do? Right? And that's like one of the worst things you could do. And I've seen everything from people kind of betting it all on red and blowing up to death by a thousand cuts.
Yeah.
Right. So, so this perfectly corroborates, what we're seeing here in this article. This is an academic article. I found this pretty interesting. Why don't you take it from here?
Yeah. I'm gonna. Would you be able to read that? Because
Sure.
it's too
It
small for me.
says
Kind of
this is
the
the
highlighted. Yeah.
yeah the article is classification of retail investors, a behavioral study by some names I'm not even going to try to pronounce. No disrespect to the authors, but you could look this up. I'll put a link in the description. And in the abstract, we have used exploratory factor analysis to identify various investor types on the basis of their approach and categorize them as market driven, planning driven, safety driven, advice driven, time driven, caution driven investors. So, in other words, they're categorizing investors based on their behavior. Further, we check how the contributing approaches lead to expected return for each investor type. We find market planning and caution driven investors to be able to achieve their expected return, whereas advice driven investors are not able to do so. Internet man, say press
Mm-hmm.
button.
Yep.
Like we happen to know somebody like that, don't we, Zach?
Yep.
Uh,
Yes, we do.
our study indicates that planning an individual level market driven strategy and ability to book loss are useful in fetching desired return by the investor. Boy, isn't that the truth?
Mm-hmm.
Both time driven long term investors investing on the advice of friends. Sorry, I can't help but chuckle a little bit. Investing on the advice of friends and safety driven investors who display safe approach by choosing good broker, good advisors, and tangible companies are found not to achieve expected return. Investors depending on fully bro- excuse me, investors depending fully on brokers' advice may end up making loss in the market.
Right. So
Whoops.
what does that tell you? That if you're going to trade, invest, or anything, if you just trust your broker, that's a bad strategic move, right? If you go on the words of some guy you know or whatever, that's also a really bad move,
Yeah.
right? Essentially anything other than actual like market
Hands-on research. Yeah.
hands-on
You
actual
got to get your
market
hands dirty. No other way around it.
fundamentals or your eyes because you have to be able to like read
Right.
profits and earnings and basic stuff. But just like with the Tesla thing, it's like how do I know what the valuation is that it's around 44 negative 44 billion, right? Because they're in debt, like they don't post
Right, right. And
profits.
and there's a lot of internet dudes pushing Tesla, pushing SpaceX. It's very easy to be just like, "Oh, okay, let's see," right?
Right. So what this article essentially demonstrates is that, which is what like think about it. If I'm going to go into it just trying not to lose money, right? Then that's what I guess safety and market driven behavior.
That
So
would be the way I would describe my
I can
strategy.
personally attest to it now, but the
Yeah.
data backs it up. So
Yeah, and even I've been pretty honest on this podcast about getting into some of our selections a little early. And I'm to the point where if I see anything in the red in my portfolio, I'm like, ugh, It's like painful, right? I have this obsession with making it green, right? Could be
Mhm.
5%, could be 2%, right? But it's got to be green, right? So if I'm in the red on anything, it just makes me uncomfortable. So yeah, this is I would describe us both in that sense.
Right,
Uh,
but that even that, Danny, that's not a good impulse to indulge, right? Because right now, for instance, like I'll use one example, like CRGY, Crescent Energy, right? They've been up relatively, but I think both of us may have been holding that slightly underwater for a while,
no, we
right?
were and don't
But
because
that's like I described before. That's a sleeper, right?
right, right.
That's something that
And
you expect in the latter form of as this plays out to be the
And
one that hits
cognitively,
us.
I know that, and we
Right.
were actually pretty explicit on our previous podcast that if it does go down, especially because these are sleepers, these are longer term selections for the incoming, paradigm shift that we're experiencing, is that it's okay to average down on those, which I've been doing. And so the red that I have been seeing in my account is nowhere near what it would have been if I just bought it. In fact, it's actually been a blessing because it's let me accumulate at those lower
At a
prices.
cheaper price,
Right,
right?
right. So
Some of
it's
the
just
selections that we'll go over, I could, it's like, I'll just use the example of Synovus Energy. Like, man,
yep,
it's like around 30 a share today. And
sure.
it's like, I wanted more, but I just didn't have
Yeah, I know.
cash to
I'm
get
biting
any
at the
more
chop.
shares than I
I'm
had.
biting at the chop to
So,
go over Synovus, but
yeah.
we got some stuff to get over here.
But with this said,
Yep.
what this may help anybody looking into doing this, first of all, I know when you start anything, right, it's important to actually, uh, I don't mind doing this because I like being methodical,
Mhm.
right? Because anytime I rush into anything, it's usually, it's never a good thing. You know what I mean? Because you either go too far or you don't reach or whatever. So my whole thing about like not just not wanting to lose money, that made all of my picks even easier to sort of go through and say, is there an actual bull case at the moment for this before I press, buy or the limit order or whatever, right? And of course, this is sort of like a big opportunity. And yeah, all of those were really good methodical decisions, right? And
Right.
now it's on the upswing, I think, due to that. Like if I had rushed in and just bought, for instance, I said, I looked into retail trading patterns, and during when the war in Iran started, uh, retail traders or investors jumped into energy ETFs and specifically big names like Exxon.
Hmm.
But what do we know about that, Danny? Exxon is extremely vulnerable in that specific region. So that sort of aping into the big names in the beginning was sort of like the worst, like
Correct.
the
And
worst thing you could possibly do.
a
Right.
lot of the larger institutions kind of have playbooks, right? So if this happens, then I do this, right?
Right.
And so some of them are very sophisticated. Others, for the most part, the larger ones actually, it's kind of inversely proportional. So they just have these generalized strategies. Again, if oil stuff happens, then I jump into Exxon, right? Without
Right.
regard to the details, right? So,
But the
um,
details matter here,
absolutely.
as we've
Sure.
discussed.
Sure.
So
Absolutely.
yeah. But
Uh,
with that said, I think this would be good for anybody like starting out or interested. Um, it's kind of like when a new student jumps into like one of my MMA gyms. You know,
yep.
a student that feels like they're the shit, they're the alpha or whatever. Danny, what happens to them?
They get their asses handed to them.
Yeah,
Yep.
yeah. And I'll
This
either do that with one of my lower level fighters, or if I want to, you know, well, that's only unless they're like really being abusive to the other students while I jump in. But yeah, that's always what happens. But the people that actually start just as a basic, hey, my name's XYZ, and they're humble about it, they're flexible, and they stick with it, they can get really good really fast.
yeah.
You know what I mean? But
Yeah.
like they don't hit the ground running and like trying to be a pro fighter from day one. That's not how things
No.
work
No.
realistically. So yeah. So with that said, the safety driven and the
Mhm.
market driven. in sort of the more conservative or modest approach, again, is what,
It's where it's
that's
at.
what I've done.
Yep.
It's worked out. Yeah, it's
Yep.
worked out really well. So,
So kind of easing, we're gonna start focusing on some of our selections here and updating on the existing picks. But to start us off, we have this natural gas glut. Um, so I think that that's going to be helping out a lot of our selections. What do you think about that?
well, yeah, the reason why this article's up in particular is so what's happened is in the Permian producers in the shale plays, they're getting oil. The problem is, as a sort of byproduct of that, is methane gas, which is natural gas. And the reason why that's part of a problem is, first of all, that's air pollution, right? So they either need to capture it or some way due to environmental standards. The problem is there's so much of a glut of it, they're actually paying people to take it from them. So while natural gas will be super expensive, like over in Spokane, Washington, I don't know, or California, in those Permian areas, like they're paying people to take it. So with that said, there's new pipeline infrastructure being built, and one of the big ones that actually not only already has pipeline infrastructure in the Permian, but they're expanding is energy transfer ET.
Mm-hmm.
Um, Energy transfer partners.
Yes.
Yeah. So that's just more infrastructures being built, and that's just going to increase not just the supply of natural gas, but especially for those toll booth operators that we talk about with the new energy regime infrastructure. Man, they're just going to, they're going to be printing money. The more cubic centimeters of gas they move, just the more cash they bring in.
Yeah.
It's incredible.
So with that, we can move on to the next slide, which is again highlighting that oil boom, which PBR, Petrobras, is going to benefit from. We already discussed about how I believe they broke a record in terms of their oil production from one field, just one field, right? Let alone the others that they have. And so basically, this article is talking about the fact that that's accelerating. Due to the increased demand from Asians.
Right. Primarily, it's South Korea and Japan. But Japan in particular, like since they had trouble with Fukushima and so forth, they've started to not just use more oil and natural gas, but like they really, Japan is a very energy hungry country. Because they have a lot of heavy industry, number one, and number two, they don't really have a lot of natural resources at all throughout their entire history. So they don't have a choice.
Right.
Right. So it turns out that Brazil has been making deals, Petrobras in particular, has been making deals with both the South Koreans and the Japanese. And we'll get to the Canadians have started making those same sorts of deals. Bidding up all the way down, just because they're not only is it South Korea and Japan, but China, again, as we've discussed, is moving back into the market, so they're bidding these things up as well, which means the Canadians and the Brazilians, I don't want to say like the sky's the limit, but yeah, there's plenty. When they say like there's demand destruction or whatever, that's noise. That's like, yeah, I don't even. That sounds more like a political talking point to me than anything backed by data.
Sure.
So, yeah.
Moving on, I know we've been biting at the chop to blow up CVE. There's a lot of reasons that this is a favorite of the show. Why don't we start with this slide?
Well, when I was looking into the Canadian producers, and then when I was looking at the pipeline infrastructure myself, CVE automatically popped out. Why? Because as we've discussed with VLO is a refiner, right? But they're not an upstream producer. CVE is unique in that they have a large, complex refining capacity in North America themselves. So they can take advantage of that huge crack spread differential themselves with their own oil. Now, when you sort of bury down and look into like the cost per barrel that it costs them to actually pump a barrel of oil. If they do, it's essentially like $21. So even if crude oil goes down to $23 a barrel,
Mm-hmm.
it would still be profitable. Okay, so compare that again to SpaceX or even Tesla. There's just no comparison, right? So why I really like CVE is they have the refining capacity and the crack spread, the ability to harvest profits from the historic crack spreads right now. But on top of that, they're centrally located where, and they recently just purchased, I think it's called the Sarah Lake region from another producer, where their infrastructure is set up such that when it comes to the processing of the West Canadian Select, they have certain geographies where they can tap into water and drain everything and actually like steam purify the stuff as they pump,
Mm-hmm.
right? Which again, what it is, it's like they have to use a specific type of like bitumen, like a hard tarry Canadian oil, and they need to heat treat it with steam before they can then process it through
I
a
see.
liquid,
Yeah.
However, CVE,
There's
unlike
a term for
Suncor,
that. I forgot what it is.
yeah, it's not hydraulic fracture.
No.
It's just like steam treating.
Yeah.
That's pretty much what it is. Uh, and all of theirs is set up right there in that region of Alberta, where they can get it all done in one place, and at the same time, they're at the fulcrum for that TMX pipeline that goes out to the Pacific, which means all of the Asian refiners and consumers can move through the Pacific and bid up that same crude, and therefore cause a bidding war between the United States refiners and the Asian refiners. So they're sort of centrally located to where they really you get the full torque for the geopolitical and the efficiency gains that company has. And I think they're still under $30, and they're supposed to report their quarterly profits, I think, on the 28th.
Okay.
So that'll be interesting. Yeah, I actually got more CVE today. I own more CVE than any other company.
It's quite a large amount of my holdings too. I did a big slew of orders. When was it, Zach? Yesterday or the day before? And by the grace of God,
Yeah, it
all of
was
those.
Tuesday.
Yeah, it was Tuesday. Okay,
Yeah.
that's right. And by the grace of God, all of those orders got filled. So I basically, nothing new. I was looking at my portfolio, and I know as we did this show, I was like, I own this. I need to own more of that, right? And so I'm kind of like
Right.
sitting there, like in my mind, like, what were those things? I even messaged you about it. I'm like,
You did. Yeah, I had to
what should I
stop what I
get
was
more of
doing.
again?
Right.
I'm
I had to
like,
stop what I was
which
doing and
ones? You know?
go back and forth with you over the phone. Yeah.
Yeah. So I'm glad that I did because these are some that you definitely want to add to. And CVE was on that list. There was a few more that we'll get to, but yet another reason you want to you know more bullish news for Synovus.
Yeah, I noticed today in particular, if you just go on like the Yahoo Trends or whatever, you'll just notice more and more asset managers and retirement funds and stuff like that are piling into Synovus. They're also piling into the other Canadian producers, but the hedge funds and so forth, they're also piling in on Synovus. So we've been talking about it for about 4 months.
Sure.
We saw it, like, honestly, we were kind of, I guess you could say, too early, but I'd rather be too early than like miss out.
Well, too late or not get there at all. Yeah.
Or not get there at all.
This article here reminds me of the analogy. I don't know if I've shared it, but you're going to hear it again, even if I did. Where does the 800-pound gorilla go? Wherever the fuck he wants. Where's the 600-pound gorilla go? Wherever the fuck he wants, except where the 800-pound gorilla goes, right? So when the 800-pound gorilla starts piling into Synovus, you know that we got a winner.
Yeah, something's they know something.
Yeah.
Right.
Yeah.
So
or they learned something.
We saw for them, or they learned something.
Yeah.
Right. And again, talking about the two favorites, for me, when I looked at Valero today in particular, it's a little heftily priced for my liking at the moment. Of course, if you have that, if you have the capital and want to pile in, they're likely going to be profitable all the way through, you know, uh, 2026, 2027. But this is a really good article. Zach's interesting that I didn't pick this because it's my name. They spell that Zach's incorrectly, actually. But they actually have pretty interesting rankings and good reason and rationale for the articles that they put out. Basically, there's a really interesting article saying, like, which is better, VLO or Synovus? And essentially what they're saying is, like, VLO is sort of not overpriced, but it's getting to, like, fair value. You know what I mean?
Right.
Like, it's sort of had enough of its gains. Sort of the sleeper in this scenario is really Synovus. The only thing that they cautioned about Synovus was the sort of because Canada and the political, I guess you could say, the political economy around fossil fuel companies in Canada
Yeah.
overall, right?
Yeah, that's a problem.
Historically, the governments have been antagonistic to hydrocarbon producers. Now, what's interesting about it is, what's his name, Carney now?
Yeah, Mark Carney, the
Yeah,
guy from the IMF or whatever.
he's the opposite of, like, Trudeau.
Yeah.
He's trying to expand pipelines and stuff like that. And to be fair, like, I wasn't a big fan of the God. What was the pipeline during the
Keystone?
North Dakota no North Dakota Access Pipeline? I had
Okay.
some friends that were part of that protest, actually, and they got one of my friends actually got beat up pretty bad. The sort of riot police that were there sent him to the ICU. And he
Wow.
got bear maced, and yeah, he got messed up. But so I wasn't a fan of the Keystone, North Dakota Keystone Access Pipeline, I believe it was. And here's the problem: they basically just said, well, we don't care that it's going through your territories and it can poison your drinking water and all this other stuff. We're just going to use eminent domain and roll through.
Hmm.
What I do like about at least what Carney's doing now is he has it to where if there's a pipeline that goes through, like, Native American tribal territory, that they get an ownership stake
Hmm.
in the pipeline itself. So,
Right,
for
there you go.
instance,
That's
they
fair.
wouldn't. Right, they're not going to do anything like just
They're not gonna just mow them over, right?
eminent domain. They're not right. Exactly. They're at least getting consent from the native peoples and tribes, and they're saying, hey, if you got X shares of the company that is running the pipeline, is that cool? And interestingly enough, Danny, when you actually include people in
They
the
want
deal
to
and
work
the
with you.
prosperity, they want to work with you.
Yeah.
Exactly. Right. As opposed to the American way of doing things.
Yeah, which is just
There
mowing
you go.
people over, sicking
Mowing people
dogs
over.
at them, sending protesters to the ICU, that kind of stuff.
Right. Uh,
Okay, so moving on to our stock selections for the day. First of all, I just wanted to highlight the price of oil. This is crude. It's kind of the one that I know Zach is a little bit more focused on Brent, but I go by crude. That's what I've been following for years and years and years. So I predicted that we were going to hit the target of 92.03, and you see we hit it, like, to the tick and then some. My next
mhm.
target is 95.24. Kind of a generous little gap here. We almost hit it today. Usually I set my targets for something that you're going to hit within the next, like, 3 to 5 days, like within the work week. And we almost hit that today. So we can see how aggressively this is going. This blue line here is showing the momentum. We're going hyperbolic here. It just seems imminent to me that we're going to hit, the $100 range, which, as you see, we only have a couple more levels in between, right? So we're basically there. So that's,
Right.
there's
Well,
that. Yep.
Brent, which is I remember I piled into BNO when it was at
Right.
$40 or something like that,
Yeah, we could take a look at
which
that.
which is Brent crude, and I got into this at around 42 something,
Yeah, I
and
actually
it's
remember us
climbing.
setting
Yeah.
these Fibonacci's, and you see it really
Mm-hmm.
taking off. So we By we, I mean
Ripped it.
you.
Yeah, it's ripping.
I didn't take advantage of this one. I was looking into more of the dividend paying, stocks that were associated with this. But yeah, you got in it effectively at lows, which is great.
Mm-hmm.
Moving on to VLO,
And the
that was
reason, yeah, and I think last week I did call, or at least I told Danny, I was like, this week should be a good week for us. But in particular, I said Brent was going to break 100, and here we are. It's Thursday, and it broke 100
yep.
today, if I'm not mistaken. So on
Yes.
track so far. On track, yeah.
So VLO has already hit our target. I remember
Yeah.
drawing these Fibonacci's. Yes, it's a little pricey, but if you were going to get in and out, treat this as a growth-driven trade, then yeah, you already hit your target. And I do remember us calling this out. If we could get in at 235, 280 or 313 is the target you want to get. The issue is I just don't see this slowing down.
Oh man, that thing's gonna skyrocket.
Yeah. So,
Why did I sell that?
whoops.
Yeah, that was. Well, look. Well, the reason why I sold VLO was no. Don't get me wrong. It climbed a great deal, but the reason why I sold it before the MOU.
It's a lot of capital to lock up, though.
Right. It was, and I thought I could put that in some of the Permian plays,
Sure.
and I thought I could put. And not only is it a lot of capital in one stock, but with VLO2, I was like, well, if there's actually like a shut-in problem and there is a real emergency supply problem and they can't get product for whatever, or gas prices happen to get too high and then the government finally says you can't export, then they're going to lose a bunch. So I saw more downside in where things were at the time,
right,
and potential upside. So I got out.
Yeah, well, again, there's an anecdote that they asked Rockefeller or Rothschild, I can't remember which one, how did you get so wealthy? And he always said, he said, I always sell too early, right? So, this is one thing I remember cautioning to you, and it's one thing to hear this and say, oh, I never do that. Then when it happens to you, you're like, oh, fuck, man. And that is, when you exit green, right, you have to just focus on that. I made money. Then you see the thing race, go off to the races without, and you're like, oh fuck, and it's a letdown.
Well, again, I bring it to the first principles. What I said, my whole thing in the beginning was to not lose money.
Correct.
So that was ringing in my head.
Exactly.
I saw the downside,
Exactly.
and I was like, nah, let's get out.
Well, exactly, and so you just have to find solace in the fact that you obeyed your risk management model, which is honestly. Yeah, in trading, the most important thing is to have a good risk management model, but even more importantly, to obey it, right? Because your risk management model could be telling you all sorts of things, and you're like, fuck it, just and that's how you get wrecked. So this is CVE, favorite of the show. Beautiful technical play here. Had the head and shoulders, had a little breakdown. I remember buying, adding to the position here. Sorry, I didn't draw the red line to show exactly where. Usually I do that, but as you see, we've exceeded the head and shoulders pattern. Once we break 43.93, this is going to be very significant because it's a high, right? So we'll be in new territory here. The next target being 49.93, this Fibonacci extension here. And if you bought here like where I did around the $35 mark, that's a handsome amount of profit.
Yeah, well, here's my question with CVE though. I got it way back like 4 months ago, whatever that is. But like, my question is like, when would I sell this? I don't really have an answer for that because it pays a pretty good dividend, not a great dividend, but it pays a pretty good dividend. And they have a rule where if they pay off like 75% of their debt obligations, all of their profit then goes to shareholders. So it's sort of it's a good conundrum to be in. Don't get me wrong.
There's worse problems to have.
Right. So it's like, do I stick around and let the dividend payouts and
I think
sort of roll in? Or
this is actually a great This is a
I,
great opportunity to talk about growth versus value accounts, right? So are you in this just to purely make money, just like buy low, sell high, and be done with it? Or are you looking at this for financial growth? Sorry, the growth is to extract the the monetary, just make money happen. Value is to own something of value, as the name implies, right? So you're building wealth by owning something of value, right? And
right.
so, in my opinion, you have to you could do both, right? You could have your growth stocks versus your value stocks. A lot of the stocks that we've introduced here don't pay a dividend. To me, those are growth stocks, right? You buy them,
Right.
you sell them, you put the proceeds into something that's going to build you wealth. So this is one of those golden horses, golden whatever the golden thing is, but it's a golden
This is
stock
more a
that's
value. This is more a value
correct.
play than a growth play.
Correct.
Yeah.
So
Okay.
what you want to be doing is, just given what we've said, it's not even time to have that conversation about selling.
Yeah.
The
Right.
conversation we should be having is when do I add more?
When do I add? Yeah,
Yep.
I got you. Now the only time I guess it'd be looking at selling is when I look at it. I'm like, man, that's way overpriced right now,
Well,
right?
not only
Like,
that, sometimes companies do cut their dividends. That's bad.
right.
It's
Right.
usually, if we, and granted, this is, we'll see how they do with this paradigm shift, right? I'm sure that there's going to be this, it's going to be they're going to have their day in the sun, right? And there's going to be some perhaps hyperbolic growth. Let's see how they do once that shift has been fully priced into the markets. The big boys have been positioned. Let's just see how they do. And then we'll have that conversation later.
Yeah, I got you. So also with the growth in value. So here's the thing. So BNO is a growth. You know what I mean?
Correct.
Like I got in at
Exactly.
42 or
Exactly.
whatever. I'm waiting for it to hit
60 or something. And yeah.
69, 70 around there, and then I'm out. Right? I already have the limit order in. Now, uh, the there's some other the other biotech stuff though, like ATAI for instance. I'm up 72% of in
Mhm.
that now. That's like so that's really good, right? So well, I have more than one share. I suppose I could just sort of bring that down because it doesn't pay a dividend, right?
That's
So
the
it's
issue.
like
Yeah.
I made 72%, so just you could cut potentially and get back in later.
Right. And that's why I like having more than one share of things
Right.
because let's say,
Optionality.
yeah, optionality. Things are a little tight. I don't have, money from my personal to, jump in, and purchase what I want to purchase. I could sell something here or there that I've, A, doesn't pay dividends, and B, I've made a handsome return on, of which there are quite a bit to choose from. So, that's always an
Gotcha.
option. Also, don't forget if you have losers and you cut those loose, one of the tenets of trading is fail fast. So if there's like if you don't see now, we have to be careful here because some of these stocks we identified as being stuff that sleepers, right?
Right.
If on the other hand it's something that you don't really think is going that route and you're just like, listen, it's better to fail fast, cut it off because you could write that off on your taxes. So ways we
Yeah,
can handle
yeah.
that.
I was thinking of a rule for myself where I'm expecting something to pop and it's down 15-20%. Just
Yep. Just cut it loose.
just cut it
Cut
loose.
it loose because you can actually take those funds, put it into your winners, and you know
Something
what?
else, right?
That doesn't necessarily mean you can't buy that thing again, right? Like if the tides turn, headlines come out, whatever, you could still
Mm-hmm.
consider that later. C and Q, that's another favorite of the show. Nice growth here. I do remember discussing this one at drop down to 56.18. That's a great 50% Fibonacci retracement. Nice little pivot here, and it's been off to the races ever since. Again, we're looking at $100 oil easily here, so we should at least be able to establish highs here at
Yeah.
70.59.
Now, zoom out a little bit to see what the next levels above that
Oh,
are, because I don't think this is going to end anytime soon. I'm
sure.
not
So
expecting this to.
So we have a 1.27 at 78.43, and then the ultimate, the 1.618. That's a really good, projected target. That's 88.40. which I think is perfectly reasonable considering the situation.
Yeah, actually, there's some like banks and hedge funds that have that at the fair, as the fair value for this. If I'm not
Yeah,
mistaken,
I would
that's
agree
what they
with
have
that.
it right now.
SU, another favorite of the show, for the same reasons. And look at this. So th this, all of our charts are looking like that. Spoiler alert. The issue is it's really good as a scientist to make a prediction and see it come to fruition, and
Yep,
that's kind of what we're seeing here.
it's what it's
Sunak
all about. It's
Suncor
all
was
about.
actually mentioned in your article too. Um,
Mm-hmm. Yep.
Permian Resources, that's another one. Got
Now,
into that a long time
out of
ago.
out of this one, and look at what a nice buying opportunity you had around the 19s.
Yeah.
That was a really good time to accumulate. But the PR is interesting because basically their business model is they're a high efficiency driller E&P, and they excuse me. Um, they are very adaptive and fast, and their cost of production is
Mm-hmm.
extremely low,
Mm-hmm.
right? So what's great about them is they can just sort of like drill wells, pump, drill wells, pump, drill wells, pump, and they have the space to do that, right? So the higher oil is for the longer, and this it's starting to rip now. This is
Yeah.
the one I see some of the more explosive upside is in Permian Resources because their profit they're levered specifically to the spot market. So the more the
Hmm.
spot market shoots up, the more cash flow they have.
Yeah, and we already talked about the fundamentals behind the Permian area, and as the name implies, there's exposure to that too. So, Devon, that's another one we've looked at. That was kind of difficult for me to narrow in who I should dump into, and Devon was certainly on the list.
Yeah, it's taken off.
Yep,
So actually,
steady
it's
buying. Yep.
yeah, and yeah, it was honestly Devon's been a sort of in that mid range there. It was a sleeper for a while. It was actually clearly undervalued for a really long time. I don't know what the markets were thinking because right in that little divot there, man, you had some really nice buying opportunities. But
Hmm.
it's going to go up. Same with Permian Resources as oil continues to be expensive. These are all just going to be rocket ships. So.
Yep. Moving on to MNR. This was a favorite of mine.
I like the dividend on it and the
Yes,
valuations. Yeah,
exactly. I was like, why is this a favorite of mine again? And then I thought, oh yeah,
fourteen
it's like the
percent or something.
14% dividend,
Yeah.
something like that.
Mm-hmm.
So 13.47. Yeah, so that would be why. And relatively low price point too. So again,
Mm-hmm.
we keep saying, I don't care who you are, if you can't in a couple weeks time save to put together 15 bucks, you know,
Mm-hmm. Just
this is
grab a
this.
couple shares at a low or something.
Yep, exactly. So
Honestly, that's what I'm just thinking of. I don't this now. This also has pretty. What's the last high it was at?
last high, so we were 1465. There's a strong Fibonacci here. I have this. These levels were drawn on the day chart, I believe. Sorry about that. Yeah, so I remember this one. Yeah, so we unfortunately don't have a long history of data. We only have going back to 2024, for which we've seen, a nice dip. So for me, this is all upside right here.
Oh yeah.
We are not going into a death spiral. That death spiral is actually like an exponential decay. If you know what that is, it's kind of like a curve. It's a downward curve.
It's a
Sorry,
limit.
on your
Yeah.
screen it would be like this, but yeah. So it's like this curving thing. We are not seeing that. Basically, IPOs are very difficult to evaluate properly. That's my guess is probably that's what happened here. We established some value here at lows, and this looks like some strong growth. So if we see this indicator, it doesn't look like there's enough data to load the other one, but we have some nice. This actually should be an oscillator, by the way. An oscillator is an
Yeah.
indicator that goes back and forth, as the name implies. This is acting more like a momentum indicator, so that's a very, very good
Oh,
sign.
that's even
Yeah,
better. So
yeah.
that
So it's
that means not
basically
only would we test the highs, on a long enough time horizon, but it would,
Yeah,
retest
and
that on the
normally I
upside.
would say, hey, we've hit this peak or whatever. We're going to, it's an oscillator, but the oscillator's not oscillating.
Right.
So
Yeah.
that's in my, and it's been doing that for basically the entirety of 2026. So it's not like a local phenomenon, as we like to say.
So other people are picking up on the same thing we
Yep,
have.
it appears that way, especially now. Um, okay,
Yeah.
so yeah, Matador. That's another one we've
This one is
covered.
my biggest disappointment, to be honest.
Yeah, kind of a little flaccid here.
Yeah, they're profitable and everything. It's just, well, actually, no, wait. I think when I looked into it, uh, they they've continued to make purchases for new land that is prime oil drilling land, but like the market hasn't liked, and they're profitable and everything. But like the market, you can tell, like every time they've announced, like recently they announced that they spent 2 billion on X amount of acres in the Permian, and then like immediately afterwards there was like a sell off,
Hmm.
right? So it's their corporate, what they're doing on the corporate side with getting more good land, right? But the in the short term, the people trading the
Right,
stock
right,
don't
right. Yeah,
don't
there's
like
an
it,
inherent lag as they, accrue those resources. So
right?
it
So
happens.
exactly.
PBR, this is a personal favorite of mine and favorite of the show. Already just smashing levels here. This is one I've done, as you see, heavy technical analysis on this with the Elliott wave and so forth, and it is just, oh, it's just music, right? It's just
Man,
beautiful. If this
that
isn't if this
look at
isn't
that.
a I guess a testimony as to the strength of technicals and why they work and how to play them, I don't know what is. You see, I it's a textbook example, right? So I have I drew
Yeah.
these. I don't remember where we were at, but I remember identifying the 618, the point 0.5, the 382. All of which, if you see these red lines, I've bought and added to the position around. So now I'm enjoying a hand. So I actually checked this today. I want to say I was up like double digits on this,
Yeah.
just because,
Me too.
again,
Me
don't
too.
forget, you're averaging down. This is the strength of averaging down. You don't want to average down into a loser, okay? You want to average down when, you got a bad price. It happens, right? So that's
Right.
what we
Well,
did here.
let's take a moment and talk about why we were so confident in averaging down, right? As we've discussed, right? If you understand anything about the cultures, the geopolitics, or even a bit of like Trump's psychology, right? You kind of knew that this war wasn't over,
Oh
right?
gosh,
Like,
no.
like exactly. Like I was skeptical that oil even sold off after the MOU because I was like, you guys can't actually buy this, right?
Yeah.
Like this isn't going to hold, and I was right. Like it's right. Like it took what 30 days or something,
Hmm.
and they never even completely stopped firing at one another the entire time.
No,
And
no,
all you
no.
had to do was look at the incentive structures, like who had incentives for what, you
Yeah.
know. So, and the reason why I think we're seeing such explosive upside on PBR in particular is think about all those other articles uh, that we've discussed on the show. But not only that, um, how Brazil can sell off into those Pacific nations, and you know what I mean. It's not like
Yeah, and
Canada where
Brazil is, people underestimate. I feel they shouldn't, but I feel like people underestimate Brazil, and I don't understand
they
why,
do.
because it's the B in BRICS, okay,
Right.
and they're one of the largest oil producers on this side of the world, and
Right.
Petrobras in particular is like the pride of Brazil, and if you know Brazilian people. And I have a lot of great respect for them. They really are like I don't want to say nationalistic
They're
and,
kind of
and
nationalistic.
yeah,
Yeah.
but in a good way, right? They're like in a prideful way, and they support their
Yeah.
country and they support their
Right.
people. And so this is just something that you're just not going to see it fail. I'm sorry.
No, I agree with you. Honestly, you had that nice buying opportunity there, I just didn't understand this valuation. I was like,
I didn't either,
yeah.
but I
So
stuck to my technicals and I just
mhm.
added to every time I could, and it's actually one of the ones I hold the most in right now.
They pay a good
And
dividend too.
they
So
do, they do. Actually, that was a huge selling point for me. You know how we feel about that. I
oh
want to say
dang,
at one point it was in the double digits. Let's see here. Go ahead. 5 point.
you know what?
Interesting.
That's not bad. Uh, Also with Petrobras, you got to think about this. Brazil and China are, like strategic allies, right?
Hmm.
China has gone
China
back
being the
into the
C in
market.
BRICS.
Exactly. So you gotta imagine they opened up their refineries again. That means that Brazilian crude's just gonna pour into China.
Yeah.
You know what I mean? And China's got plenty of USD. Even if they want to price it in USD, either way, like Brazil is going to have a really good business relationship with China, and they've opened up too. That
That
could be
that would
why
be
we're
a
seeing this. Yeah.
real slap in the face if Brazil started pricing their oil in reais.
Oh man, that would be something, wouldn't it? I don't think Lula actually likes Trump, so that may happen
It
at
could,
some
yeah,
point. Yeah.
very well could. This is Chevron. Yes, we've covered this on the show before, obviously from the technicals.
Look at
Little
that
pricey
explosive
for
upside.
me,
Me
and
too,
it
but still. Yeah.
yeah, it's great growth here. The reason why I didn't necessarily get into Chevron is I'm pretty heavy in Exxon, and so same kind of growth here. Again, a lot
Yeah.
of technicals. We've been studying the crap out of these, so I'm just like, if you have two things that behave the same, it's like, so that's why I didn't jump into that. But again,
Well,
great company, a lot of risk.
the only issue with the Chevron thing that I pointed out in the Bullis case is they have the monopoly on the Venezuelan crude. So moving
Oh, good
forward,
call.
right, even though Exxon has good assets in West Africa, you know anything about West Africa, it's not near as geopolitically stable as our hemisphere would be.
Right,
You see what I'm
right.
saying? So with the new energy regime, the whole investment thesis there was that if Chevron's going to be selling off that crude to American refiners, right,
Hmm.
that indefinitely you're looking at basically Alberta, Venezuela, Colombia, and the Gulf of Mexico.
Yep.
That's the whole new infrastructure, if you will, and all the pipelines in between.
So let's shift gears to shipping. We have NAT Nordic American. This is something I actually bought a long time ago. One of the only times I've actually listened to a tip, by the way. This one happened to work out, but it was like $2 or something. So I'm like, I could blow 20 bucks on
Why
on a
not?
buddy.
Yeah.
Why not?
Mm-hmm.
And so at that point I was like, why not? So yeah, glad I did. Glad I took his advice on this one. Head Rush Capital. If you're listening, that's you. And so yeah, this is looking really good here. Why don't you talk? I know that the shipping has been a theme here. Why Nordic in particular?
Okay, so first of all, they pay an enormous dividend, right? They're incredibly profitable, but Nordic
Wow,
American,
9.75. Yes,
right?
they do. Interesting.
Now, what I like about this company is they have, I believe they have a mix of like medium-sized, mid-range crude fleet tankers,
Hmm.
meaning they're not going to like route over to the Middle East anymore. What they're going to route to is like West Africa, or if they want to work with China, they're going to have to go all because the Houthi. Remember what I said? I did predict
Hmm.
this too. The Houthis have fired on Saudi shipping now,
Yep.
right? So the whole Red Sea is shut and Hormuz is shut. What
Hmm.
does that mean? As we discussed before, any trade that has to go to those South Asian countries, whether India or whatever, they're going to have to go around the Cape of Good Hope and then back again, right? And
Right, right, right,
what
right.
that does is that adds to the miles per tonnage that they
Hmm.
can charge, right? They can charge a certain amount of money per miles that they travel. So the longer they travel, the more they get for the shipping itself. And the commodity that they're shipping, you have to understand, is also going up. So
Sure.
not only are the routes longer, but the value of the contents that they're transporting is going up as well. So when we're talking about explosive upside, I actually see more explosive upside in this new regime in the shipping category than I do in perhaps the the oil producers and the energy companies themselves, specifically for this reason.
So this one, I guess, is new to the show, Hafnia Limited.
Mm-hmm.
This is called an inverse head and shoulders pattern. It's basically it's what it sounds like. We've gone over the head and shoulders pattern on the show before. We have this downtrend, and then we have this type of a thing. Basically, the same kind of behavioral analysis as the head and shoulders. So the break is obviously to the upside here. 786 and 886 at $8.22 and 862. Again, at this point, for $7,
Yeah, right. Is it going to hurt to grab a share? I don't know. No,
yeah.
I'm gonna. The reason why I just yes was because I was earlier today. I looked at this, and I was just doing my math and everything, and I was like nickel and diming myself, and then I said, screw it. But
Fuck it.
it was like 750 or something at the time. So it's
Hmm.
already up from when I got it when I was nickel and diming myself.
So
Anyway,
FRO, I know that we've covered this. This sounds familiar.
Frontline potentially has the
Yep, this
most
is one that I
explosive
own.
upside here. Yeah.
Yeah, this is a good one. I remember this one now. Yeah, this is a really good one. I remember we discussed the fundamentals on the show before. We're very easy here. We have sustained buying pressure. We are at essentially this our Fibonacci anchor. We have a in higher lows, which shows that again it's kind of like boiling, right? We're reaching a boiling point. And this
Mm-hmm.
to me seems just an inevitability that we're going to hit 44.91, that being the first target, 51.53 being the second. And again, this is one that I probably won't sell anyway. It's a growth one that also pays
Right.
a really
Good
decent
dividend.
dividend at 8.25%, which is incredible. So yeah, definitely
Right.
fan of this one, and it's doing quite well.
That's what's nice about a lot of these shipping companies too, is like the dividend that they pay. It's sort of
It
like
almost like doesn't make sense,
it doesn't make
right?
sense
You're
not to
like,
own
why,
it. If
why are
you
you
right,
doing
exactly.
this? Why are you doing this?
Why don't you
Like
own this?
this
And they're
one,
so inexpensive too. It's
International
scarce.
Seaways at 9.37. This one's actually a little heavier on our list, but when you consider what they are and what they do, not quite so. I mean, it's not like a $10 stock, right? But again, this
Right.
one seems imminently ready to blow. We're sitting
Oh,
here
look
at
at all that pressure building up
exactly.
on
Look
that
at
previous top right there.
exactly. So we see not only like check out this blue line that measures buying volume, and we're just you know off to the races here.
So when you see it coil like a spring like that, Danny,
Absolutely, that is the analogy I would use.
what is what's happening is there are so many buy and sell signals trying to reach that previous top, but then people selling, but and such
It's
that
exactly.
the kinetics are so high
Yeah, that's exactly
that
what it is. It's
you
an
get that
area.
choppiness.
It's an area of high liquidity, right? So when you have a bunch of orders coming through, there's a lot of trading actions going on here, and once those sell orders are absorbed, then we can actually push through. There's going to be an inherent lack of liquidity because we haven't been there
It's gonna
before.
suck it to
New,
the top.
so it's gonna suck up to the top. Where that top is gonna be, again, that's where buyers and sellers come to the market and make market things happen, right? A lot of them use techniques just like this, or there could just be a natural phenomena. Usually, it does follow these patterns. So I would say that imminently 109.69 would be a target, or at least to break up to $100. Psychological levels play
Play a
into it
role.
too.
Yeah.
Like somebody's just like, $100, I'm a sale there, right? And so it's like you do see that quite a bit. ASC. That one looks new to the show. Again, something south of twenty
Yeah, it's
dollars.
something I missed. I missed last time, but I had gotten it a while ago for the same reason. Um, Now, these shipping companies, they're broken up into uh, like VLCCs, product tankers, and medium ranges. Honestly, owning a complement for all of those, especially with the dividends that they pay and at the respective low valuations, some of these integer figures, it's just, you could say, yeah, the product tankers are going to do better, so on and so forth, nickel and dime yourself or hedge and haw. But, owning the whole, I don't want to say like own every single one or anything like that, but a mix of those is I think fair.
Yeah. Moving on to DHT, again, same kind of pattern here, just a little bit longer on the the extension here. This is a basically a range forming a value area between 1664 and 1881. This I think would be we're building pressure here, as you see for the KMI. This is the Kovac OBV. That's this momentum indicator.
The blue line?
The blue line, exactly. We're building pressure, consolidating in volatility here. It's a spring coiling ready to blow. So 18, anywhere in here, that's a good area to buy. If for some reason it retraces, scoop up some at 1664 for sure. Put it on your watch list.
I think this one is a dividend king, too.
It is. It is. I think it
right?
was actually a Leviathan. I just checked that. I want to say it was like 9 something.
It's high. It's
hold
really
on
high.
one second.
They pay a nice dividend.
8.11. Yeah, so that's
dividend.
for sure. SFL. This is nice. It's a little okay. So I guess this is in the Indian rupee. So don't get scared of the price just yet. I'm not sure if this is offered on the NYSE. It looks like okay. So if we can get it, we'll have to fact check that if we can. But we're looking at $7.76. So if you can't save your lunch money in a couple weeks to have that,
or just not go to McDonald's. It's like $20
exactly.
to go to McDonald's
I know.
Nowadays, so.
Yeah, it's crazy. If this dips to 721, you know me, I like my 618 and my .5 Fibonacci levels. If we see that, so for me, if I was going to enter on this, I'll have to check this one out. Let's see if they have.
What's the dividend on that one?
Dividend is 0. I wouldn't trust this because this does appear to be an Indian company and this might not be right. So we'll just have to fact check that. Looking at 786, 721, and 676 for areas where I'd be looking to buy. Last one is 10. That is Tsakos Energy. That's a good Greek name, Tsakos.
Is that TNK?
TEN.
TNK?
TEN?
Oh yeah, that one. And then could you add TNK to that one too?
Sure.
I didn't add that one.
TNK. Good. Okay, that's another one. It's a little high price wise, but again, these all are kind of in that category of really high growth. Love how it aligns with the Fibonacci's. 63.27 would be a great area to buy. Just don't know if we're going to see that, especially when poopy hits the fan for them. I
don't know if it was on the list, Danny, but STNG.
I think it's been on here before.
We've talked about it before. This is the one I find some of the most explosive upside.
Well, check this out. Speaking of explosive, look at this again. The OBV, that buying pressure. It's a way to think of that long-term buying pressure. We see this nice kind of coiling up of the price action here in terms of the volatility constricting. It just imminent to me. This looks like it's imminently going to break out to 82.39, 84.44, 86.79. Those are the targets that we're looking at. If we break highs, 92.38 is in sight. And here we do see a 2.19% dividend. Not bad considering the price, right?
Okay.
So again, you have to factor that in.
The reason why I like this one is because I believe they have the largest fleet of product tankers. So we talked about the crack spreads before. Okay. the reason why I find the most explosive upside is those crack spreads. Even as oil goes up, refined products are still going to be super expensive too.
Right.
So the value of their cargo again, and then you have the added miles because they need to go around the Cape of Good Hope. You're probably this is likely to be. I'm just saying from the math that I've done, it would be the most profitable and the most explosive upside at current valuation.
Sure. Sure.
What's the dividend on?
2.19 again. Don't just look at this number. You have to factor in the stock price as well. So a lot of the ones
Right.
that are like what we call dividend leviathans at like 8%, you're looking at like 10, maybe $20 stocks. This is so as the price goes up, you won't necessarily be getting as much returns, and that's just how it goes. So just take into account the value that the stock is trading at when you take into account the dividend, because that's pretty high considering the price. So that's about all for the stock. We are running on time, but I did have, I just can't help but throw a little zinger in about and have a laugh at SpaceX's expense. I have a family member. This family member may or may not have appeared on the show before, one story or another, who contacted me in a frenzy that she saw SpaceX hitting $500. And that it's broken all kinds of records and stuff like that. And I got on, and if you're listening, I love you, but this is why we check our sources. This is why we check our data. So I get on and I'm like, you know what? I don't know. Maybe they signed some government contract. Maybe Trump did a thing. I don't know. Maybe could be. Stranger things have happened. So I get online and I'm like, I see these articles. SpaceX stock slides for a week straight. Three stats that explain SpaceX's $1 trillion stock wipeout. History says SpaceX's stock will drop 13% by June 2027. The only one who
That's optimistic.
The only one who is moderately bullish of SpaceX is Kathy Wood, the poster child for DEI, right? So this is why that doesn't work. So I got in and I'm like, really? You're wasting my time with this? Turns out there was one of those viral clickbaity emails that it was a SpaceX token. So she's like, well, wait a minute, the token price is $500. I'm like, oh, I see what's going on here. So yeah, so just make sure that not to fall into the clickbait. Do your research. Honestly, a quick Google or Bing or whatever this is pulled up these articles right away. I couldn't help myself, but just take the screenshots and be like, look at this. Like, what are you doing to me here? Like, why'd you waste my time? So anyway, just a fun SpaceX story to close out the show.
And Danny will tell you that I've actually, I'm not one for risk or anything like that, but like, I don't know. I've even been thinking about like shorting SpaceX stock after the lockup periods or something.
Right.
First of all, I'm not new to this game. I've disliked Elon Musk forever.
No, we've been long-standing critics of Elon, and to me, it's always kind of a litmus paper test of who's a sophist. If they're like, "Oh, Elon Musk's a genius," and there's so many of them that we actually call them the muskrats, right? We have a term for that, like, "Oh, the muskrats are piling into SpaceX and so forth." And so when the muskrats
and musketeers,
they see that. What are we at, minus 20% ROI on SpaceX? When that lockup period is over, they're going to want to get out.
And I'll tell you, Danny, here's look, is it muskrats? They kind of, the reason why I don't dislike them personally or anything. However, when I see that behavior, I genuinely start to lose any hope or aspirations I have for humanity. I'm like, oh, this is why good things can't actually happen.
Yeah, exactly. It's like he's just an influencer, like a Jordan Peterson or like what a lot of these guys without substance that have large followings.
Not just
all kind of fall into that category.
But he also has. I'm sorry, no matter what you say, he's a genius or whatever. He is a very, very, very slippery grasp of material reality.
Yeah.
And that's just been demonstrated time and time again. And it's just, I don't know, man. The fact that in the United States in particular, there is at least a demographic that seems to worship billionaires like that. That's the disheartening part. It's like, what are we doing? What on earth are we doing? I don't get it. But anyway, that's why you'll never catch us, investing in anything like SpaceX.
Yeah,
and
exactly.
As the data has already proved, then that's really, has been the smart thing to do.
Yep. So I think that's a good position to close on. So thanks for tuning in, and we'll see you next week.